Medicaid laws pretty much to say, well, we should give Medicaid asset protection for non-partnership as well. But unfortunately, they're separate different contracts. We're saying from the beginning, it's very difficult, and those are insurance companies' decisions as well, because they got to meet our rules. It's very difficult to buy a non-partnership policy, and then 5, 10 years later, you try to convert it to a partnership policy. They're two separate contracts. The non-partnership policy may not meet the partnership requirements. The insurance company over the years has collected premium, is putting in certain reserves, making certain assumptions, and when you'll go and claim. So they cannot, for 500,000 people, constantly allow people to change and go from non-partnership to partnership. They would ask you to start all over again, buy a new policy, which in most instances is not advisable, because you would lose the first policy that you bought, and then 10 years later you're older and you're paying higher premium. And so although it's the insurance company's decision, what we see is that in most cases a conversion is not allowed, and it's not as simple as it may sound. Unfortunately, that's the answer for that. So it's important to try to buy partnership policies from the beginning instead of trying to convert later. So I hope that answers that question, and I'll take more questions around the topic later. If I could just give you a little bit more information. One thing you may hear is that, oh sure, the partnership policies are much more expensive than non-partnership because they offer so much more. Reality is that the state is rewarding us for taking individual responsibility to protect ourselves against the financial risks associated with a long-lasting disease or disability by buying long-term care insurance. So with the partnership, which was designed to be as comprehensive as possible so that you don't have to have high expenses out of pocket, Medicaid asset protection is free. It does not cost us an extra penny. If we are buying a non-partnership policy or a partnership policy from the same insurance company that sells both partnership, non-partnership, the premium will be exactly the same. We will not allow an insurance company to be approved for the partnership and have non-partnership policies of the same value to cost less. So the premium is exactly the same. You're not paying more for a partnership policy. Of course, if you buy a partnership policy which is 5% compounded for inflation, and $350,000 in 14 years becomes $700,000, and you buy a non-partnership policy where the average increase may be 3% for inflation, and so 14 years later, the $350,000 may be $450,000, then you can see the huge difference in value. That's why automatic inflation protection adds to the cost of the premium. So that's obviously a consideration, and it's an individual decision that people make. Which policies work for them, how much protection they want to have, how much assets do they want to protect. Also, those assets that you protect through Medicaid asset protection because of the partnership, when the individual dies in Connecticut, the state, under federal law, is supposed to try to recover those funds paid through Medicaid for the individual's nursing home care. But with the partnership, the state will not go after the individual's estate to try to recover the expenses paid through Medicaid for the individual's care.